Good morning, everybody. I'm Bridget Bailey. I'm your moderator for this panel on the funding solutions for IPPs. I hope we are going to bring you an interesting and insightful discussion. In fact, I know we are. I am joined by a really great panel, for once not dominated by bankers, but with people with different ideas. I'm joined by David Jarrett from RDJ Consulting, Maritz Perold, who is in the EPC space and is a general solutions provider, and Rensha van Tonder, who is from Standard Bank. A few housekeeping rules before I hand over to my panelists. When you ask your questions, please will you use the chat button and type your questions so we can read them and answer them, making sure that the right person answers. I'm now going to ask each of my panelists to introduce themselves, starting with David.
Thank you very much, Bridget. My name is David Jarrett, and I'm the managing consultant for RDJ Consulting Services based here in Namibia. And we are an energy and sustainability specialist company. Our involvement in renewable energy and sustainability matters takes us to the forefront of understanding some of these issues around funding and funding models that have plagued the delivery of renewable energy projects. And thus, I'm very happy to be here on this panel. Thank you, Bridget.
Maritz, would you like to introduce yourself?
Good morning, Bridget. Good morning, team. My name is Maurice Perold. I'm the CEO of a company called Turnkey Solar Solutions. We're a fully integrated EPC company. So what it means in our terminology, we're in engineering, procurement, construction company. We're very well known for the first commercial solar rollout in South Africa and certain projects up in Africa. And we are here to discuss the various financial solutions around the IPP. So from our side, we'll give an insight from the complete design and implementation and the bottlenecks which we had to cross to be able to get the right funding for our various projects. Thank you very much, Bridget.
And last but definitely not least, Rensha, our banker.
Thanks, Bridget. Yeah, I'm one of those, as Bridget referred to, boring bankers, but I promise you this will not be boring. So I'm Rensha van Tonder, heading up the power sector in Standard Bank. Before that, I was with IDC for some time, so certainly bring you a diverse view of how funding will work and what we've done. Just to highlight, many of you probably know Standard Bank. We mainly fund projects in our presence market in Africa, with a global footprint as well, offices across the globe, but focusing only in funding projects in Africa. And we've had a long history and track record in funding specifically IPPs and power projects. Thanks, Bridget.
Thank you all. Before we get into the discussion, I want to set a few background pictures, just to give us context to our discussion and to highlight some of the themes that I personally want to touch on. At present, I think we're in an extremely exciting energy market. The South African government has incredibly ambitious plans for 3 rounds of renewable energy. We're waiting for the risk mitigation IPP procurement program to be announced in respect of preferred bidders. They're supposed to be launching a coal and a gas IPP program later this year, as well as a battery storage solution. In addition, in the region, we are seeing a multitude of captive power projects starting. And this, I think, puts a huge emphasis on where is the money? Show me the money, in the words of Cuba Gooding Jr. Show me the money. Where do we think the money is going to come from? And my first question is to Rensha. Rensha, the South African government's looking to procure over 13,000 megawatts in the space of 12 months. Do we have enough internal African funding sources to fund that money? Or do we need to look to the big bad world to help us? And if so, and I'm going to bring Maritz and David in on this, how do we prevent a dollarization of our economies? And in particular, David, for you, what is the Namibian view? on dollarizing, US dollarizing, because you obviously have the dollar in Namibia, but US dollarizing the economy. So Rensha, I'm going to ask you to give your insights as to whether we Africans have enough financial resources to fund our own ambitious programs.
Thanks, Bridget. Yeah, it's indeed a very, very ambitious program. I think the timelines are also extremely tight. As you've mentioned, we are all awaiting the RMIPP outcome, and it would be a good test to see if those projects can be implemented and reach financial close as per the set timelines. But to your specific questions, a question around the money. I think an interesting factor is the fact that we've seen in the RMIPP a lot of competition between commercial banks for those projects, which was to a certain extent not a surprise, but an overwhelming factor in terms of driving funding for risk. So at the same point, you sit with many funders looking at the SA sovereign, looking at the exposures and the ability to do more. So I think for the time being, there's definitely still appetite. I mean, I was overwhelmed with the competition we've experienced between the commercial banks for RMIPP. Rolling out the ambitious programs, as mentioned by government, is certainly going to test those limits. I think we, as Standard Bank, are having serious internal discussions around appetite levels, future rollout of programs, and where we would like to increase our funding appetite. I think the one thing that is maybe worth mentioning is the ability of commercial banks to sell down to the institutional market. And I think a lot of that has happened, but there's still ample opportunity to do more of that. And we've seen more and more institutional investors and asset managers reaching out specifically for renewable assets. So the asset class certainly ticked the box. I think anything with the ESG flavor falls within their appetite levels. And I think if it needs be, the commercial banks will start to sell down more. We as a bank have been at the forefront in leading that from initial rounds, developing the secondary market. So I think it's going to be a challenge to get to those numbers just through commercial banks and local DFIs. But we've seen appetite from international DFIs. I do think the challenge may still be ZAR versus dollar, and it's, in my view, not the intent of the government to dollarize our economy, but I think it's going to test certainly the limits and appetite for commercial funders in South Africa.
David, when you're advising your clients, where do you see the challenges on this domestic funding versus the US dollar? And how do you think that we're going to be able to address the conundrum? And this is a double question. How do you think we're going to address the conundrum of the private sector IPPs? By that, I mean the captive power sector IPPs possibly being crowded out by the official government programs and battling to access funding? Or do you think that that's not going to happen, that they will be able to access funding?
Thank you, Bridget. I think I'd kind of take a step back, and I think that the bigger issue here is clear policy direction. We tend to get a stop-start policy approach regionally. That's what we see happening. In the Namibian context, we have a number of new policy, what I would call initiatives and movements, such as the National Energy Policy and documentation like that. We have an IPP policy that clearly looks at the issue. So the matter then is to send clear signals to the investors. And then there are other issues that have not yet been mentioned that I think affect the funding of the projects. And it's not really the source of funding, it is who is responsible for obtaining that funding. And so the issue more surrounds issues around equity, and also in what currency does that equity arrive at the gate of the project. So if the funding arrives because it's locally funded and it arrives in ZAR or Namibian dollars, then that is fine. We don't have that forex risk. But if the funding has been obtained, for example, through angel investors in Mauritius and places like that, not to pick on Mauritius as such, or out of London or other places or New York and so on, then you start to get that forex risk starting to step in. And on top of that, another factor that impacts, and I think this is one of the areas that gives a lot of sleepless nights, both to the bankers, and Rensha can tell us if this is so, and also to governments in terms of having to provide sovereign guarantees and look at risk management, is the fact that we're now talking about local equity into projects. And that is one of the problems of the local equity being able to step up to take its place, so that it does not become just foreign investment, but a good mix and match. So I think that is where some of the conundrum questions really lie, as to how do you get that blend that satisfies all parties involved, and at the same time achieve that sustainability and consistency goal that we should be heading into.
I think you've raised some incredibly important questions, particularly around policy certainty and people knowing that there is a pipeline, which I think we need to circle back to during the course of this discussion. Maritz, you're at the coal face, as it were. You've actually got to implement the projects that to the rest of us are possibly a little bit esoteric. Certainly for me, they're very esoteric. I do the documentation, but I don't necessarily get to have to implement anything. You have to implement and make sure that there is no funding gap if you're going to take the project forward. What's your take on where things are going, particularly with reference to the private sector market, which I think is becoming an increasingly important player in this arena?
Thank you very much, Bridget. I agree with you 100%. There's definitely two different markets, and I think that's very important to understand the two different markets has been developed throughout the years. You know, the big RE projects, when it started in 2008, 2009, where the government started going out and tender to get international companies to be able to fund projects and get various solar farms or various wind farms off the ground. So that was the first processes where Eskom started engaging in government, starting to procure with external parties to be able to build renewable energy. So we started more or less in the same time when the RE project started in 2007, 2008, and we quickly identified two different sectors, one being a government sector and one being the private sector. For a beginning, we couldn't participate in the government sector, and I think that's very important for the banks to understand, because we engaged with all the banks throughout the years, is that where we saw the bottleneck in the beginning, you get your big Spanish companies, you get your big American companies come to South Africa, and they provide EPC plus F, as they like to call it. So they bring the engineering skills, they bring the procurement, the construction, and the finance. So they come with the complete turnkey solution. So they come with the funding already in place for these various projects, because the funding is critical, obviously determining at what price or cost per watt or cost per kilowatt you can sell. So one of the big cycles is be able to define the funding that you can use for various projects. So the first rounds was fairly easy for international companies because the tender criteria which the banks went out on was very high tariffs. So there's very high tariffs. So international markets all of a sudden had to view in South Africa and say, globally, we're going to get some of the best returns in South Africa's market due to two aspects. Due to our yield, our sun, and secondly, look at the tariff. Look at the tariff that the government's willing to purchase electricity at. So that opened a massive market for international investors to align themselves with international EPC companies to come to South Africa and start building solar farms and wind farms. So we tried to participate throughout the years. And like I said, we quickly realized we can't play in that industry because we don't have the right funding partners. So we as a South African company need to start looking at the various finance options available. So we engage with all of South African banks, and we also start working with various other institutions like asset finance companies, like the likes of Merchant West, who's got a bit of a different understanding when it comes to technology. Because at the end of the day, yes, it's a project, but it's technology that needs to be financed over time. So the first bottleneck that we've seen is that the type of funding that was available in that moment in time in South Africa is that you need to amortize it over time. So to really make it worth the effort to undertake this type of project where you actually own the asset and sell electricity, you need to start looking at long-term financing. And that was one of the bottlenecks, because all the banks we engaged with, South African banks, might it be asset finance houses, might it be our commercial banks, long-term financing at that moment in time wasn't really a reality. So you needed to go to international companies that understand long-term financing, that understand you need to finance certain projects over 15, 20 years to even make it bankable. So that was one of the bottlenecks for us. So we started growing our portfolio in the private sector, where we ring-fence key individual projects, whereby the off-taker is a blue-chip company. It is very easy to go to the banks to get this type of funding to finance this type of projects. But the maximum at which we could unlock in that moment in time was 10-year funding at very expensive rates. We were looking at prime +2, prime +3, whereby if you look at some of the German banks finance projects at 1%, just for argument's sake. So every time that was our hurdle neck, is when we started participating in the bigger projects, our biggest fear, our competitors, international companies who already got a credit line in place at very low interest rates. So even if the levelized cost of solar came down, if you look at the new rounds of renewables, the tariffs also came down. So you're in the same market now as where Eskom buys bulk. So a lot of the tenders we've been awarded, a lot of tenders we've been involved in, we're directly now tendering at the cost associated with Eskom. So if Eskom, it costs them 58 cents to generate 1 kilowatt of power, we need to tender on that bulk tariff. So we don't have the luxury anymore of the higher tariff. So yet again, we said, okay, let's look at the various IPP projects that's available, and we look at the secondary market, which we like to call it, which is the private sector, where there's much higher tariffs. There you're looking at a 15.68% increases consecutively for the next 2 years. You're looking at 50% increase. You can build that into your business model. So you don't have fixed tariffs over a certain time with limited increases. In the private sector, your returns are much quicker, and it fits into the current business model due to higher tariffs. So in my personal opinion, that's the two different sectors. Is your government sector and the private sector, definitely two complete different lines, and it needs to be viewed completely differently when it comes to a financial institution to be able to ring-fence these projects and financing them.
I think you are entirely correct, and there's a very different flavor when you are working on a pure private sector project and when you are working on a government-sponsored program. But I do think that we are starting to see influences from the private sector creep into government, the government sector. So one of the issues we've always come up against when we're working on private sector projects is the concern about putting balance sheet on the line for protracted periods of time. In other words, committing to a take or pay. Somehow their balance sheet is on the line. If the project doesn't work out, do they buy the plant? Do they have to take over the equipment? But at the same time, whilst the South African government's been happy to step up to the plate and sign an implementation agreement with, let's be quite honest in this virtual chat room, what is a guarantee? They guarantee Eskom. It might not be called a guarantee, but the wording is such. There have been governments, like the Namibian government, who accused me, probably quite rightly, in a workshop I was doing with them for Professor Anton Eberhardt, of messing up the IPP market by putting in place an implementation agreement in REAP with that government support. So where do we go to with this increasing reluctance of governments? And I personally think the South African government is going to go that way sooner or later, where they're going to say, we're limiting the balance sheet support we're going to give. Rensha, I know that's really not news that anyone in this market wants to hear. But I think that that's a growing trend. I'm interested in hearing your view, David, how you see the market growing on this balance sheet support, how you advise your clients when you're trying to put together these projects around balance sheet support.
Sure. Particularly on the issue of balance sheet support, the way forward that we have seen is to particularly just move straight into the project finance sphere of the capital development of the projects. Now, in terms of the off-taker, because primarily the balance sheet support comes from the off-taker guaranteeing that they will continue to pay. Because of the history here of consistency of payment. We've not heard of any delinquency to date in any of the projects. And I will say that there has been a certain measured approach in tackling projects so far. All has been well. Now, if one was to look at a rapid increase in commitments, then we would start to have some questions raised. I wouldn't say concerns, but questions raised. I still feel that there is capital around locally, both in the South African market and the Namibian market in particular. I think there is enough capital for what is being done at the moment. I also feel that there is international funding that can come through and support and is willing to take that risk. And I think that was one of the reasons why there is this pushback on the balance sheet being the central, I suppose, supporting factor. That there is this inherency in looking at it from a futuristic point of view. And also one of the things that I always say to my students is when you look at electricity, it's kind of a different product from many of the other products that are put before financiers. It's one of those must-have projects, must-have products. And in terms of people paying for it, I think there's a certain amount of insensitivity to price. We complain about it, but when the reality is at the end of the day that it will be paid. The question now is at what point? And also another factor that seems to affect this balance sheet approach is the issue of grid defection. So I'm raising another issue here again, where customers may decide, and sadly it's the customers who can afford that will then say that we will leave and we will just set up our own system because the laws now allow. So I think in terms of balance sheet, I'm wondering if it is really the way to go, because it kind of says it's either or at the moment, and that would kind of put us in a corner where we have no other way out. So I'm not sure I've answered your question, to be honest. So I'm pleading the fifth, as they would say. But at the same time, I'm saying that I think the market works. I think the issues are somewhere else, and maybe we need to be a bit more flexible on this, and maybe that's a Namibian view taking there.
I don't think it's a Namibian view per se. I think, to me, in my mind, this is one of the big conundrums you've got to unpack in this market. I see you nodding, Maritz, and I'm going to ask you to just come in as to how you've seen this play out in the deals that you've done before I move on to Rensha and put her in the hot spot.
Thank you very much, Bridget. I think it's very important because we all know in the end of the day, we need the banks. That's the bottom line. If you look at the vastness of the projects that we need to implement, you start looking at 500-800 megawatts. You're talking of billions. Now, yet again, balance sheets, I agree 100% with David. Our biggest challenge to date is that all the projects that we had to finance is balance sheet based. So we need to bring our balance sheet and we need to bring our clients' balance sheet to the table to be able to get the right funding in place. We work with a lot of equity funds to say, no, we take a little bit less risk. We look at the equity appetite, so we put equity in to be able to mitigate the risk, to make it viable for that specific financial institution to be able to finance it. But I think it's becoming more complex from a bankability aspect. So there's a lot of other variables. I think the banks have learned and have also burned their fingers on various projects, which doesn't make it more easier for the banks to actually fund these type of projects. What we've seen in a lot of instances, there's different markets developing. One is currently we're sitting with over 170 municipalities, which on their own are completely independent. They don't need to buy from Eskom. So a lot of people have identified that as a key sector to say, okay, now I'm going to build solar farms and start selling to the local authorities. But again, you need to now take a view from the bank's aspect. Who's the off-taker? It's a municipality. Most of them are bankrupt. Most of them can't even pay Eskom. How are they going to pay for this specific asset? So it becomes, in my opinion, more and more trickier to be able to finance projects. Yes, you look at different tax incentives, which I think really helps driving these projects, where you've got a Section 12B tax incentive. You had previously 12J tax incentive in place as well to get international funding into South Africa at cheaper rates. But from a bank perspective, yet they need to look at the bankability versus the actual risk And I think that's one of the biggest problems which we've identified throughout the years. What is this risk? And how us as an EPC company can come to the party to leverage the banks to be able to fund these type of initiatives. What we did a couple of years ago, we started working very closely with a company called Hanover Re. They're one of your largest insurance underwriting companies in the world. And we're just a South African-based company. But we quickly realized this might leverage us when we go to the banks. So we give a performance guarantee. That's how far we went, to be able to issue a performance guarantee from Hanover Re, which we can take to the bank, to be able to see if it's not easier then for the bank to be able to fund the project, fund the projects. We even took it a step further. We said, okay, one of the other risks which the banks have identified, and I worked very closely with the banks throughout the years, is to try to understand which the bottlenecks. The other bottleneck is great. We've got a nice balance sheet in place, but yet again, the terms. Anything can happen in the industry. COVID is a very good example. We've recently implemented a solar solution for one of the biggest dairy farms in Gauteng. They got an unbelievable strong balance sheet. They've been around for 45 years. But that's now a new risk which the bank identified to say, yes, they've got a very strong balance sheet, but this is the problem. 90% of their offtake is currently restaurants, is currently Woolworths, etc., who's been closed for months. What is that net effect? So that specific industry, we ring fence and say there's a risk associated to that specific industry. Doesn't matter regarding the balance sheet, but is that industry going to operate for the next 5 years? You need to sign a minimum, a 10 or 20-year lease agreement or PPA agreement to make it worth the effort to engage with that project. But this is now the other the risk which has come to light. So I think it's becoming actually in certain sense easier to finance projects, but on the other hand also more difficult because of other variables that popped up. That's my personal opinion.
I think, Maritz, that's incredibly interesting from a private sector perspective, because I think this is the big conundrum. Are companies going to be around? What are they going to look like? And the world we live in at the moment has shown us, as we all know on this virtual conference, it's not going to be this business as usual. So Rensha, on that note, I'm interested in hearing how the banks see the market playing out, particularly with regards to certainty, financial certainty, political certainty, policy certainty, and business certainty.
Thanks, Bridget. I think, just maybe to differentiate around balance sheet and risk and certainty, and to touch on what Maurits was saying. I mean, if you look at the off-grid space, embedded generation, whatever you want to call it, we call it decentralized energy because it is one of the markets that we identified from a power sector perspective that we want to pivot our portfolio to just spread our risk a bit better, just because we are so biased towards utility risk, off-taker risk. So just to Maurits's point, I mean, funding of those entities are absolutely critical. How do you fund those projects? And we have been very proactive in engaging with our client base, whether that is in the corporate and investment banking world or in the commercial banking world or in the retail banking world. What we've said is that our clients are looking for a funding solution. They don't want to hear, I'm a big client, I sit in this part of the bank, or I'm a smaller client, I want to sit in that part of the bank. But at the same time, you need to have a holistic solution. So we've embarked about a year ago on a venture, and we call it our decentralized energy venture. And we've done a whole lot of work around just listening to our clients, listening to stakeholders, and trying to find a way how we can serve our clients better. And to Maurits's point, I think you mentioned earlier how you bring some finance structures to the table. And I think that's exactly what we've seen. So we've been very successful in the asset finance space. Our commercial banking team has been absolutely phenomenal in rolling out that product to clients, have EPCs that are pre-approved. When our clients approach us, we can have an informed discussion, and it's quite quick to get that finance going. But when you get to the point where it's a complicated PPA with an off-taker and you need to put balance sheet behind it, that's when it gets more complicated. And I think, we've seen in some of the mining entities that are putting out RFIs and RFPs that it is not that easy. So we've been partnering with some DFIs to look at tenor tranching, and in some cases we got to 15 years. We're still in the progress of hopefully winning those bids, but it hasn't been easy. But at the same time, for that end of the market, you need to look at certain products. And the mining sector, you talk about certainty. If you look at them, many of them have been around for many, many years. They've still got life of mine. So everybody is quite keen to find a solution to support them. But at the same time, you have a lot of smaller clients driving this cost security on power, reliability of power that are actually driving their needs. And then don't forget about ESG. So much more riskier for a funder from a certainty point of view, taking balance sheet risk. So what we found is that, and you've probably heard about it, we've started to develop a new platform business that the bank is instrumental in. We're going to call it Power Pulse, and we will probably launch it in the next month or two. And the whole idea is to take solutions to our clients and have a more holistic approach. I don't want to say too much about it, but I think we need to think differently. We need to embrace the digital world. We need to be absolutely client-centric in our responses. I'm not saying it's the ideal solution, but hopefully it will bring us closer to our clients. I think, and Bridget, to your earlier question around government balance sheets, I think let's be honest. If it wasn't for the government underpin for the Eskom PPA, the commercial banks and the funders wouldn't have been so keen to fund the program. And that has been partly the success. So thanks for including that in the implementation agreement a few years ago. But going forward, it's certainly going to be an issue. And to be frank with you, we had internal debates around that. How would we approach an environment where that is not there? And to pin it down, it's all about what will a new unbundled Eskom look like? What will that independent buyer look like? Is that going to be an entity with a bankable balance sheet? When I fund projects, let's ensure that I fund the projects that are absolutely at the bottom of the cost curve. I want to fund those projects that are with the best sponsors, the best EPCs at the bottom of the tariff. So if that entity, whether that's Eskom or the new entity, can't pay, at least I know they will pay the cheapest electricity because it makes sense for them to do that. So that's part of the things that we're playing with. I think we all know about challenges in Africa with utilities that don't have balance sheet. Even a government guarantee doesn't mean much. And how do we structure risk structures around that? And just to use Namibia as an example, I mean, they don't offer any balance sheet support from government. However, we've been very successful in closing the Harda project 3 years ago, 37 megawatts, the biggest IPP there. And the way we've done that, the way we've structured that project was by accepting that we only have appetite for manpower risk up to 7 years. So we partnered there with Prupaka, the DFI, who put a guarantee structure together, and we've been able to put a tenor down beyond 10 years. I think we managed to get to 15 years, but we included them in the financing from day one. So those type of structures are possible. However, it is in an environment where there's a lot of uncertainty. We don't know whether manpower will be able to collect and develop and be so strong as they are currently. And you need to be able to operate for those uncertainties. And I think it's definitely a space that everybody's looking for solutions. And that's exactly why we see such slow growth of new generation projects in Africa. And whilst many people are looking at the off-grid sector as a potential opportunity because of the balance sheets and large corporates looking for their own solutions.
You've touched on some really important points there, Rensha, and that's around the future landscape and what it looks like and policy certainty, and whether, you didn't say this, but I'm putting words in your mouth, whether the central regulators can keep up with the ever-changing landscape in Africa. My personal sense is that we're on the cusp of huge innovation in respect of how the private sector intersects with the state utilities, what the energy landscape is going to look like in the future, mini grids, off-grid, decentralized, as Standard Bank calls it. But at the same time, certainly in South Africa, Schedule 2 to the Electricity Regulation Act is quite difficult to interpret. I've had a few clients call me and ask me to explain it to them, and I explain it, and I think it's quite clear how it works, and they come back and they say, this is as clear as mud to us. And we're not quite sure how we fit into it. David, I haven't paid much attention to the Namibian energy sector, much to my fault. How's that playing out in Namibia? Do you have a greater degree of policy certainty? Do you have a greater understanding of where the private sector can actually play?
Thanks for that, Bridget. Yeah, and I think it's because there has been a lot of lessons learned from the South African experience, as well as Namibia has its own unique approach to a lot of its issues. So between the combination of them, I think we have a quite positive outlook where Namibia is concerned on that front. I think the bigger concerns that I would have is really around, and I'm sorry to drag you all back there, but what does the future look like if we get rid of some of these balance sheet support issues because of things around grid defections and substitution, what I call substitution risk, especially, and Merz was perfectly describing that, where COVID has shown us that there are other alternatives, and also some of the sectors that we were looking for growth. For example, in the Namibian context, we were looking at tourism as an area of growth. It feeds right into a lot of our support sectors and so forth that have been decimated. So transport is one of the things that has been affected in terms of movement of tourists, self-drive, and so forth. And for some people, they will say, but that's not electricity. No, but all of those sectors need services, and their services have an electricity base. So you've seen that wiped out in many circumstances. Also in terms of the fact that people have said to themselves, okay, if I'm going to have this risk, then it would be easier that I have a known risk. You know, I've purchased my own energy system, so I have my system that is hybridized or however it is set up. And especially with the new introduction of I shouldn't say new, but at least the advancement of battery storage, energy storage, it has changed that landscape as well. So it would be easier for me to know that I'm paying 10, 20,000 Rand per month as a capital charge, than to know that for equipment that I know I will have and I can sell on, than to know that I'm paying 20,000 Rand a month for electricity that I'm not even using. That's probably just my connection charges and so forth. So we do have these, I suppose, new risk. And I'm stealing from a colleague I heard at the NIRP meeting recently talk about disruptors. And I would say that that's where the industry has to start looking, both in terms of financial risk and in terms of EPC risk. What are the disruptors? So even in the EPC space, I've provided what I consider to be the best technological approach today. And because of the delays in the system, 6 months later, there's a new disruptor on, that has turned up on the scene, that has created this change, and financiers have become aware of it, and then realize that, some of the known comfort relationships that exist are now, why didn't you warn us about this? And so it's destroyed relationships existing going forward, or it's created new revenue streams for finances, and we can't blame the finances for that. That's my personal view, that they have to go after shareholder development and returns. So therefore they will go after whatever is the latest that is existing. So we do have a unique space here. I think policy is nearly there. It still needs to catch up, but I think it's nearly there. So the private sector has good space to play in. The problem is the market shrinking? That might be the other question.
Maritz, your take on policy uncertainty as a private sector participant who takes a huge amount of policy risk, interpretation, and how it's going to play out in the future and how it's going to be implemented in the future. What's your experience around the policy uncertainty we're seeing?
Thank you for raising that question, Bridget. I've got a complete different approach when we started in renewables in 2008, is that a lot of people, or at that moment in time, would ask us, is Eskom against renewables? What if they're going to switch off our plant? And that moment in time, we did the first commercial solar installation for Mustek Holdings. Mustek is one of the biggest IT distributors in the Southern Hemisphere. It's an 8 billion rand listed company, but they pay 2-3 million rand a month for electricity. So we did a national rollout for them. So I said, there's no rules, regulations. There's nothing governing us as yet. That still have to come. But let's take a complete different step. So what we did at the specific head office at Mustek and Midrand, we changed it into an open site where everybody can visit and make their comments. The banks can visit, make their comments. The municipalities can visit, make their comments. Because there, the first bottleneck was you're not allowed to connect to the grid. But why? Why don't you understand? What's the risk involved around it? And then we quickly realized it's not that complicated if you get actually government involved, if you get the local authorities involved, and you just need to train them. You just need to share your intellectual property and show them exactly how it will work, how it works internationally, how it can work in South Africa. So I think that's one of the big hurdles which we crossed, is when we started implementing various projects across South Africa, and we had actually tangible reference sites where you can take government, local authorities, and the banks to visit these sites and see exactly how it's been implemented over time. And I think that also mitigated a lot of other aspects for us going forward. But we quickly had to realize in which different sectors we want to play in, and we want to go for the low-hanging fruit. You know, David, one of the things you said is, you look in the growth and potential of various projects. If I just look from South Africa's perspective, is, in my opinion, we're still a very young country. The other day I was standing at Menlyn May and I said, this is only 10 years old. 40 years ago, there wasn't even a Menlyn shopping center, nor a Menlyn May. So we're a growing company. Baldwin undertake to build 100,000 houses in the next 5 years. It sounds unrealistic. They're busy doing it. They're busy building 1,000 houses as we speak, giving off 25 houses a week. Anglo-American is putting a lot of infrastructure into South Africa. They're building a new mine. They need 800 megawatt to be able to sustain this mine. That's equivalent to 3 Eskom power stations. So I think, in my personal opinion, we've seen it since 2007, 2008, we're taking a phenomenal growth as a country from an infrastructure aspect, what we actually need to sustain ourselves. And that's where all the unique business modules come to light, is that you had just consecutive increases from Eskom, you had the levelized cost of renewables coming down, and you at a point where you're cheaper than Eskom. Eskom can't compete currently with the renewable energy solutions available in the market. And I think that's where we've now get to that critical point that we can directly compete with the likes of Eskom, which will literally overnight open a complete new market and a whole new dynamics to be able to look at.
So I think what we're hearing about now is a lot about disruptors, about new sectors opening up, new models, new approaches. There's absolutely no doubt in my mind, Rensha, that if it weren't for the bank's appetite and the bank's enthusiasm for renewable energy, and for what in many instances was very new technology, particularly in the CSP space, REAP would not have been the success that it is. I know you didn't fund all of the CSP, but you did fund some pretty experimental technology there. What is your approach as a bank to these disruptors, and how do you see it playing forward from a traditional financier perspective?
Yeah, Bridget, it's not an easy, straightforward answer. I think you've mentioned CSP, and I think it's worthwhile just giving you a bit of context there. So when I was at IDC, we were inundated by project developers looking for development capital to develop these projects. And at that point in time, we as IDC and our board decided that this is a market failure where we need to play a role in leading the pack. And very successfully, funded and developed a number of CSP projects. I think at the time there was one specific project where no bank was interested. I think we managed to find DFIs to partner with us. And I think we should not underestimate the importance of getting the right partners around the table. I think the track record of renewables in South Africa has been extremely, extremely good. We haven't had significant failures in the REAP program. Even on the off-grid side, I mean, I can't recall of projects that went terribly wrong. So I think that certainly helped. The track record is important. As a commercial bank, obviously you want to take as little as possible risk, and then you need to make sure that your returns stack up. As a DFI, you play a different role. And I think with all credit to the IDC and what they've achieved over time, I think one need to have the right mix of partners around the table to take these risks. I think the next level in terms of disruptors are this digital world, and you've mentioned, virtual transmission networks, virtual power stations, the whole digitalization of the sector. I mean, we funded a client in Kenya who's doing rollout of solar in rural communities through M-Pesa. Online, you buy your power through your solar, through your cell phone with M-Pesa. And I think those examples have been, widely supported by various participants. But I think that's just the start. I don't see in Africa we can wait for transmission lines. We have to skip that. We need to find ways to be more proactive to get power to people. I think we've mentioned storage earlier. We've supported projects in RMIPP with significant storage capacity. I think the one thing I can say is that the bank is not scared to partner with the right players. If we do have the ability to share the risk with the right players, I think it's important to ensure that we make a success. And again, DFI's got certain roles to play. I mentioned some of them helping us to get tenor extensions on off-grid projects. That's important, but the DFIs and the various funding institutions need to understand what their role is. I mean, we certainly are not there to crowd out anybody. We want to partner. And in fact, on the storage side, in some of the projects we've done, we partnered with the IFC. And the experience they bring to the table is unbelievable. So we've learned through our due diligence process, and hopefully some of those projects will be successful in our IPP to show the world that South Africa can do, large-scale, utility-scale storage. And the mining companies are also looking at this very closely. I had a call earlier this morning with a big mining company, and they said they've done the feasibilities and they want to include storage in their solution. So definitely, I think innovation is here, disruptors are here. That's exactly why we're looking at this platform business. The bank is trying to take something to its clients, which is not just funding. It's a solution that can help the client to be more successful in the long run. And it doesn't need to be just funding. It must be much more than that. And I think partnerships are absolutely key.
So, Rensha, I'm going to stick with you on my next question. What's interested me, I'm a partner in an international law firm, Herbert Smith Freehills, 26 offices around the world. We're very big. We do all sorts of things around the world. But what's really interested me is that very often it's the South African experience and the South African credentials, particularly in the energy sector, that clients have been most interested in. And I think to a large extent, this has been driven by the banks and the appetite of the banks and different funders, different funding solutions to come in. You've emphasized the partnering aspect. Could you build a little bit on that? Because I think what we're seeing in Africa is a whole new approach to partnering, to not using the traditional model going forward. And to a large extent, we're dependent on the banks to drive that forward?
Yeah, Bridget, it's something we've been debating internally. I mean, what is the next structure for large-scale projects? And let's use South Africa as an example. Project finance is complex. Project finance is the way these projects are being done. But what else can we do? Shouldn't we start looking at, we've developed the market, there's a whole pension fund industry that loves the asset class. Everybody's getting more comfortable. Should we not start to look at project bonds, listed bonds, And these things are things that we've been all playing with. And again, it's something that requires different players, different funders to be bold enough to come together and to say, I'm comfortable as a commercial bank to take construction risk. I'm happy to close these projects, put very complicated financial documents and contracts in place with the help of law firms like yourselves. And then, but I need to roll my money. I need to be able to sell down, to be able to make up more appetite to do more. And why aren't let me not say some of the banks, but some of the commercial banks and DFIs, what are their roles? Are we clearly defining that? I mean, if you've got such a massive rollout of renewables that we see as per the IRP, can we not come together and make sure that we optimize that partnership? I mean, I'm comfortable just to do a 3-year facility. My liquids will be priced lower. I'll be able to offer much better pricing to the project. But how do I optimize my value proposition for my clients? I mean, if you're going to Africa, everybody's looking at the World Bank and MIGA and how do we support and unrisk these projects, but it's complicated. I don't want to compete with DFIs. I want to complement them. I want to make sure that a client, when they partner with us, being comfortable because I got an in-country presence, I know how to bank the client, I know the client, I can provide guarantees, I can provide short-term facilities, I can provide credit cards to that client in the country because I got a franchise there. But I don't necessarily have the appetite to provide a long-term project finance solution for a project where I don't have that appetite. So I think that's where I come from in terms of partnerships. In South Africa, I think, yes, we've been very successful in structuring the renewable project specifically. We're making great progress on the off-grid side. But going forward, I mean, why haven't we seen ECAs in South Africa? Is that not the way to unpack and unlock risk diversification? I know the ZAR component always comes through in terms of swap cost and competitiveness, but maybe it's time that we work closer with the ECAs and find solutions to help us to be able to do more. But at the same time, everybody do what they are necessarily experienced and have appetite to do. I hope that gives you a bit of perspective. How do I see partnerships?
That's very, very interesting. And for me, it's very welcome news because it sounds to me as though we're moving away very much from the traditional project finance approach where everyone's in their lager and with their defined roles. And that isn't conducive necessarily to partnership because by the time you finish structuring the deal in the negotiations, very often you don't want to see each other for quite a long time and the relationships need to recover. And I'm the first to say the lawyers are often the primary cause of that. But David, you're at the coalface, as it were, in having to advise clients how to structure deals. Would you care to put your thoughts to what Rensha has said and how you've seen partnerships play out in the funding space?
Yep, Bridget. I think she's laid it out perfectly well, and I think the other word that's cropping up here is the conundrum that we face in dealing with these issues. My personal view and the direction that we guide clients in is to say that, look, partnerships for the project depend on how you see the project. So, for example, if you're trying to do a flip with the project, and let us not fool ourselves, these take place. You're just in, you want to develop, you sell on, you move on, you develop another project, and so on. If that's the sort of approach you're taking, then for you, your reputation is more around the fact that you deliver returns. It's not about the long-term relationship that you have with those entities. So you'll take a different approach. But if you're one that is looking to stick around and you know, in the sense like you want to build a relationship with a mining client, you want to be their client for the next 25 or provider for the next 25 years, then you need to be delivering value. You need to be dynamic, and you need to have a relationship that is going to go through, I suppose it sounded more like a marriage now, you know, the good and the bad. And you're willing to, you know, for example, if there is political risk that occurs during that lifetime, you're going to stand there with them, not just step back and just like, I've got good lawyers, no pun intended. You're also, when you look at things like forex risk, that you've not just priced it in as an academic exercise, but you've genuinely looked at it and said, well, okay, these are some of the factors that we believe that could influence it. Let us, you know, group up and have further expanded partnerships, because in many cases, some investors feel that the only thing they need to do is to take that, what I call the schoolroom approach, you know. So the off-taker, you know, we get this, the direct agreement, the tripartite agreement. So we've got the off-taker, we're the SPV, and we've got the financial lead arranger, and that's it. So the community is left out. The issue of corporate social responsibility is not there, because you're not a, you know, as I said, it depends. If you're going to take a long-term approach, then you're going to have to do that. We're not concerned, and I agree, we're talking about renewables, but we're not concerned about environmental matters and how we approach it. So the essence of partnerships for me is more, what is your true intent when you're getting involved in this project, and how far do we need to take it? Because each one of those steps will also have an impact on LCOE, and also at the final point on the tariff that you deliver. So if you're just trying to win a project so that, yeah, you know, the tariff is 80 cents ZAR or 80 cents Namibian dollar, that's what our target is, then you find that everything else dies on the wayside. But if what you're trying to do is to deliver a sustainable project, one that looks at the community, it looks at possible expansion, it's a foot in the door sort of approach, then you will take a different approach to it. And that and so I'm sorry I might have answered it in a roundabout way, but that is how you have to determine how you play in that space. And for us at RDJ, the way that we approach this is that we say we're going to be around, and we take more of, I suppose I have to be guarded by this statement, a nationalist approach, in the sense like, what is good for the country in which you operate? So if we're in Malawi, if we're in South Africa, we're in Zambia, we've got to look at it from that point of view. We can't just, you know, this is what we do in Namibia, so we're going to transpose it on Malawi or something like that. We've got to have that discussion and see how it fits into that landscape. And that's how I think the partnership should be developed.
I think, David, you've hit on a number of incredibly important points, which I don't think we've got time to explore today. And that's around the one-size-fits-all approach, which is one of my particular bugbears. I hate foreign advisors coming in and saying, well, this is the way we did it in Kazakhstan, so therefore that's the way it should work in Malawi. Which I had somebody say to me recently on a Malawian project. And I think the whole ESG discussion is a topic in and of itself.
Yeah.
Community involvement, which is, I think, is part of ESG. I think it's part of the whole new responsible world, which I think COVID to a certain extent has caused us to think about and bring to the fore. But before I get on my soapbox and start doing a lawyer monologue, I want to hear what Moritz's views are, because you, I think, have been ahead of a lot of us in the private sector. It sounds to me like you've been building partnerships for a very long time.
Thank you very much, Bridget. You know, my personal opinion is the following. This won't ever work if you don't have partnerships. You know, the South African mentality is, I can say that being an engineer and a South African, is we like to work in silos. We need to start thinking out of the box. Between Bridget, Renshaw, there's a lot of intellectual property you've developed throughout the years. You can't put a value to that. And that's something you've learned over time. And that intellectual property is worth more than anything else, in my personal opinion. And that gets developed through partnerships, starting engaging with banks, starting to understand how they work from a partnership perspective, be able to sit in the boardroom and unpack the entire project from beginning to end, from cradle to grave, and understand the risk associated. Ask the questions, workshop it to say, how can we as a private sector help the banks? From a law aspect, there's various types of PPAs we've seen. There's even lease agreements. Maybe it's easier to look at an asset lease agreement than a PPA. What's your opinion? And through all of these partnerships, which we developed throughout the years, you develop a lot of intellectual property, which yet again, to me, is the value, which you can then duplicate going forward. But you wouldn't be able to duplicate it if it wasn't for all your R&D phases. You spend a lot of money to be able to get to this. So never forget where you come from. Never forget where you've started to get to the specific points is through partnerships. And I believe the way forward is to be able to have the right partnerships. And I can talk out of experience. When we started, we burned our fingers a lot, lots of times, working with international companies. They introduce various technologies just to use us as an R&D phase that we see it doesn't work. So we've learned a lot, and we've learned a lot working with various financial companies that, yet again, the partnership is a reality. What I want from the banks is to be able to say that we value that and already value it, but to take it to the next level is to say, let's start working similar to the international companies. How does the international banks finance this type of project? Is they do their calculations, and the one aspect they want to be involved in from a partnership is equity. I'm more than well happy to give away equity if that will mitigate the risk. But that we need to know, and that we need to structure from day one. So is that a big catalyst to be able to unlock the entire paradigm for finance in South Africa, various projects? Might it be that easy? And I say that all due respect, that start looking at the equity module. So for the bank to mitigate the risk, yeah, we want to partner with you, but we don't just want to finance a project. We want to have equity in the project to mitigate that risk. We'll welcome that. We need to understand from our side what needs to be done to make these projects work. And that's my personal opinion. One interesting thing that we did throughout the years is one of the questions that popped up in various projects we've done throughout the years is that, what happens if the client defaults? What can we do with the asset? Is it easy to be able to pick up the asset and move it to another site? Because there's various off-takers. But yet again, that's a process you need to investigate. And yes, there is a process. But what we wanted to start doing is throughout the years to be able to create a portfolio. And I think that is the necessity which we need to look at. Growing portfolio, so you can mitigate the risk over portfolio. So if one client defaults, you can move that asset over to another site. Because we know already the quality behind the renewable energy sector. We know the average performance guarantee on solar panels, for argument's sake, is 25 years plus. So you can turn that asset multiple times, but you need to start somewhere. And that's what we realized through a partnership is to start grow a portfolio of projects together. And that will also help mitigating the risk.
Thank you very much. I'm not sure that we've got long to spend on ESG, but if you wouldn't mind each just giving me a minute of your thoughts on the role ESG can play and how you interpret ESG. I think there's quite a narrow interpretation internationally, and I'm not sure that that narrow interpretation is really what we're looking for in Africa. I think we're looking for something a lot deeper. David, can I start with you as to what your thoughts as to the role of ESG and what ESG means?
Sure. I hope you don't ask me to E means and SG and G, but in terms of the safeguards, and that's why I'd wrap them up, because I think we're getting new terms added to it, I think daily, let's put it that way. In terms of social safeguards, I would say that the first thing is understanding why was the project needed in the first place. So in the previous days, and this I shared, Maritz, in the early days of renewables in the region, we had a power crisis. It wasn't because we were really interested in sustainability or anything like that. And it was in terms of levelized costing and how quick we could ramp it up, it was going to come. And then it was understood that, look, as soon as this thing grows and becomes bigger, the key question is, and understanding the history of Southern Africa as well, what can be done for communities? And then it started to expand itself. So it's now well understood that the impact on communities in terms of even just moving a workforce into a community, you know, and then taking that workforce away is the same as developing a mining town and then, you know, letting that mining town die. So these are some of the things that I think we need to continue to focus on. Again, I'm happy to say that Namibia has very strong environmental impact assessment rules, and also in terms of the banking rules, there's a number of different international banking rules and local banking rules that we've now started to see. Renesha, I'm going to get a smile from you. I know the Standard Bank has a sustainability guide. I don't think I've given it the right name, but I know it looks at that in terms of, is this funding going to be used in a way that it is helpful and not harmful? That's how I'd wrap it up very quickly. And I think that is the baseline at which we've got to operate.
Thank you, David. Renesha, how does the bank approach this ESG theme?
Thanks, Bridget. Yeah, it's a very topical theme, you know, and you will see in all the announcements that the bank recently had, or over the last 2 years at least, how we adopted policies aligned with sustainable funding. You can just refer to our coal policy in funding coal power. But more so, we've realized that we need to be more proactive around how do our clients see ESG. And to your earlier point, most of them are looking at ESG in terms of, if I do X or do Y, can I get cheap finance? You know, can you give me a green bond? Can you give me finance that give me a better interest rate? And I think, you know, for many mining companies or big international companies, it is truly something that they want to embrace, because they're under so much pressure to show sustainable investing, sustainable work practice, etc. So what we do find is that a lot of clients are looking at how can we support them, and immediately the energy or power supply discussion jumps at the fore. You know, so if you look at, for example, one of the larger processes that's been run, and I can mention it, I think most people are aware of it, is the Makwalakwena mine, Anglo mine up in the north, that ran an RFP for a power project for self-generation. I mean, one of the key criteria was you need to ensure that you include the community in the equity, and how are you going to support them. So very, very important for many of these companies are, how do you embrace community involvement, social upliftment, and we've seen that being built into many of these RFPs. So very interesting. From a bank's perspective, absolutely top of mind. We had a participation in the recent mining Indaba, where we had a whole session with around sustainable investment and funding. And most of our discussions was around how do we do this in a manner that we support energy solutions and, you know, develop the hydrogen market. So I think there's many different angles to this important topic, but we should never forget, it's not only about the E, it's about the social side as well, the communities and the involvement on how do we optimize the future that we're all embracing here.
Thanks, Renesha. Maritz, your views and experiences of ESG?
Well, this is a good question. This actually came up in various other discussions I was involved as well, on the environmental, social, on the government side. On the environmental side, I think we're going to have a lot of challenges to come going forward, because the vastness of the different projects, specifically in the mining sector. They don't take it for granted, but I think there's going to be some bottlenecks of various projects I would like to implement in a very short time or space. And I think the environmental factors is actually going to delay some of these projects. So I think the ESG side is going to be a very particular sector we need to focus on, specifically to mitigate risk on the environmental side, but to be able to efficiently roll out these various projects. It doesn't become a bottleneck. That's just my personal opinion.
Thank you very much. I've taken us over right to the very end. You've been a fantastic panel. Thank you so much. I've personally learned a huge amount and I've had a lot of insight. I'm now going to throw the floor open to questions from the audience for us to try and answer when we get the questions. But in the meantime, thank you so much for being such a great panel and being very free with your ideas. And I hope you have a great rest of the day. Thank you.
Thank you. It was nice being here.
Thank you. Thanks, Bridget.
Great. Thank you.
Thank you very much, ladies and gentlemen.
Thanks.
Thanks, Mo.
Cheers. Bye.